Look, Ma, I've made it. I'm on YouTube. I'm a talking head, talking about dividends. And hey, what's up? I'm Russ, and this is my channel, Dapper Dividends, where we talk about dividend growth investing primarily, and I share my nearly 20 years of investing passion with you each and every week.
Twice a week, every week.
And also, we're trying to build this new-ish bridge portfolio that we have in addition to other retirement accounts. And what we're trying to do is hit $6,000 a year in that passive income. Why 6K? Well, that would be $500 a month, and that's just what we want to start at and see how high we can get this going. So thanks for making us a part of your investing journey.
Have a safe journey.
So Duna Berlin said, I'm not sure what to do because the spinoff and the already mentioned dividend cut makes me a bit nervous. And I came across this on the dividends Reddit about the dips in red and green. Let's see if we can get through this question.
We'll get through it.
I know it's best to put money into stocks when it's red and not when it's green, so buy low, sell high. But what say AT&T? I bought shares at $22 a share and I would like to get more of it. I guess just because it's going up and now it's $24 a share, do I buy? This is long run-on sentence, the $24 a share and hope that it keeps going up or wait for it to come back down, I guess. This is just a general question of stocks in general. Do you only buy stocks when they're going down? So what I would say to both of those questions is you must know what you're buying before you buy it if you're investing or if you're trading. Now, if you're trading, you have to know your entry and exit before you buy. Trust me, I've done it the other way. It's much more difficult and creates much more stress, pain, anxiety, and sleepless nights when you don't know what you're buying and why you're buying it.
I don't know.
So I'll take the first position as if I bought it for a trade in the low 22s, and what I would do. The first thing I would do is look at a stock chart. Now the chart is more of an art than a science, and it just tells us information about when people were buying and selling in a given period of time. Now each of these candlesticks represents a day's trading activity. But I think AT&T will eventually go back to the low $30 range. When that is, I don't know, but I am pretty confident that it will eventually get back.
Get there.
Now AT&T had chopped sideways since about August from 28 to 26 and 27, and then we hit that drop in October, and that's when we started making consistent lower lows and lower highs as it went all the way down to $22.02. But that is when we hit a reversal, and I think a lot of this is tax loss selling. There's people panic selling, and there's also funds that have to sell that have AT&T as part of their Dividend Aristocrat Index, which AT&T is going to be booted.
What's your reason? Kick them out.
In January from most of the Aristocrat funds. Now those are dividend companies that have been increasing their dividend for at least 25 years. Now there was resistance around the $23.50 to $24 range, and it did break out past that resistance as it's heading to the next resistance, which I see at about $25 level. So I think we're going to be going up and touch $25 in the next few days.
Are you sure?
Now, I like a couple of these indicators, the RSI and the CCI. I won't get into those, but this is one that I like, the MFI, the Money Flow Index. This shows if money's coming into the stock or out of the stock, the ETF, the crypto, whatever it is. And we can see that right after it hit that $22 level, bam, money started pouring in, so this line has just gone straight up. That means there's a lot of money coming into AT&T right now.
Yes. Money.
So I think AT&T is going to hit $25 pretty easily. If I had bought in at 22-ish, at the low 22s, I would probably set a pretty solid target of $25. But I'm not a great trader, which is why I stopped trading, because I got too attached to my trades. I would marry my trades instead of date them.
You don't want to marry me.
Didn't work out for me. Long story short, I became a dividend growth investor because what I have to do here is buy and never sell and add more, and I can definitely do that. So what if you're buying and holding AT&T for the long term, like yours truly is holding AT&T? We've done a few videos on AT&T, so most of you will know my thoughts on this. Feel free to check them out. But really quickly, why I am holding AT&T is I think that John Stankey is trying to clean up some of the messes that Randall Stevenson, the former CEO, kind of got them into.
It's a mess. This is a real mess.
A lot of bad acquisitions, trying to be another Jack Welch, the famous GE CEO, who really kicked off that era of buying everything, becoming a blob, just adding company after company after company.
Kids, that's a bad blob. Bad blob!
Whether they were in your wheelhouse or not, and it didn't really work out. Now we're seeing a lot of companies really pare that back. So this is one of those moves. They're spinning off Warner Discovery. I think it's going to be called WBD, and it's going to trade on the NASDAQ. So as an AT&T shareholder, we're going to get a 71% stake in that new entity. And they're also going to be receiving AT&T about $43 billion in cash that they can use to reduce some of that massive debt load.
Oh my God, Lily, that is a lot of debt.
And the dividend is still going to be right-sized. I know it's a cut, but I like to say right-sized. Now, when an entity like Warner Media is going to be going out, they're taking a lot of cash flow with them, but they're not a core entity, and AT&T is still going to have a massive amount of cash flow coming in. So that dividend is still going to be, from what I've seen, around 5%. We're going to get those shares in one of two, maybe three ways.
Tell me about it.
Either through a spin-off where we'll get shares in that new entity and Warner Discovery. We'll get a split off, which means we can choose either more AT&T stock or shares in the new entity, or it could be a combination of both. And that is done through a reverse Morris trust, which isn't used a lot. But the short of it is, it basically means that this will be a tax-free transactions for us shareholders.
Oh shit. Tax-free?
Tax-free.
If you've already bought, now you're going to get to play a little bit of choose your own adventure. You're going to get to decide if you want to be a trader, if you want to lock in profits, pick a target, shoot for it, set a stop loss. Don't be like me and pull the loss. So I don't know what your averages are, but you're going to have to come to an agreement with yourself, with your big self, what you are comfortable taking profit at. And if you're a hodler, if you're like me, hodlin' tea, that should be a shirt.
No.
So if you're hodlin' tea, like me, what we want to see is AT&T constantly increasing in share price and eventually raising those dividends, which they did, by the way, just reaffirm their next dividend of 52 cents, which is going to be frozen until that merger and spinoff occurs. So the lesson here is very simple. Always know what you buy before you buy it. Whether you're trading or investing, you have to have a thesis and stick to it, and you don't sell if you're investing until your thesis for investing is broken or has changed or looks like it could potentially change.
You must know. I must know.
And always, always, always be wary of advice you're taking from people on stocks, because somebody could be trading for a week's gain and you're trying to hold for years. You're not playing the same game as they are. So if you're going to take advice from someone, try to make sure that they're playing the same game that you are.
What are we playing?
Now, I shared 3 reasons why I bought more AT&T and Verizon stock. Check that video out. Some good information on there that you might find useful. Now, I've been Russ on Dapper Dividends. Check that video out, and I will see you there.